Well, housing starts across the country continued to trend upward in October. Data from the Canada Mortgage and Housing Corporation shows housing starts rose 1% compared to the previous month, marking a fifth straight month of higher starts. Of course, this is construction breaking ground in this country, the measurement of that. Our next guest, however, thinks there is more downside to come for housing starts in the next quarter. For more on this, let's bring in Fenton, President and CEO of Lanterra Developments. Thanks so much for coming in.
Thank you for having me.
So it is interesting, 5 months in a row of increases to housing starts. I mean, we haven't really spent that much time talking about housing starts until all that recently, I think, because people care so much about construction in this country and whether homes are being built. And this is the beginning of it, when shovels are in the ground and the sort of measurement of that. How are you seeing the level of activity out there? What is it like?
Well, I think that a lot of us have responsibilities to continue to build the product that we've sold. So I think that's kind of what we're tracking right now. The number that I see every month now, and you suggested properly, was that for 5 months, everyone's tracking this number of how many starts we have. That's not really telling me how the market is doing, to be quite frank. And I think over the next quarter, we're probably going to see the numbers come down, not because we have not a good market. It's because there's some of the starts now aren't happening in our business. So some of the development community is saying, hey, we're not going to start, we're not going to go to market, we're not going to create shovels in the ground. So that's what's happening. But I think that barometer isn't a real great barometer, to be honest, to check out how the market is doing.
What would you prefer to look at?
Well, I look at the amount of sales that are transpiring. I actually follow the rental market because I'm always intrigued by how the rental market does in a market like this. And I track interest rates. And I also tracked how markets do in other parts of the world.
When it comes to some of these companies, putting development on pause, how much is that happening, do you think, right now out there, especially in a city like Toronto?
Well, great question. First of all, Toronto is protected in the sense that we have so many people moving around the city wanting to live in Toronto that even if interest rates went to 10 or 11 or 12%, God forbid, I think the market would still have strength and people would want to own the asset.
It's interesting. I live in a neighborhood that's there's a lot of construction going on, but it's construction that started a while ago, and then there's some other plots of land that are just sitting there. And I'm wondering, are people going to move ahead with that? Could some of the areas where there's a building that's supposed to be put there, but it hasn't started yet, could there be a bit of a lull for some time here for some of that?
I don't really think so. I think that, first of all, the A players will continue to build as long as we have support from the major banks, which we do at Lanterra. I think we're good. I think that the market right now is just catching its breath. And the biggest issue right now is the interest rates and where the interest rates are going to stop going up. And my own suggestion, as I've suggested a few times on air, is that I think we're going to come down. When we come down, we're going to hit it hard, and we're going to be down substantially on the interest rate side.
When it comes to people buying, pre-construction, from what I've heard, it tends to be more investors that are doing that. And, if you've got multiple properties and you've got multiple loans out there, you're trying to finance this stuff. Do you see that sort of pulling back the investor interest?
Not really. It's a great way to play Monopoly. So what people are doing is they're putting down 15% over the next 2 years. And in today's community, what some of the development community is doing is they're trying to stretch out the deposits. So if you think about it, you're buying something like $1 million asset. You're putting down $150,000 over the next 3 years. And that by the time you get to it at the end, based on the last 20 years, you've made money. So I think that the model works, and I think that there's a lot of investment community that's buying. We're also seeing now a lot of people are actually trying to acquire. And what I think is also going to happen is that the millennial group, that over the last 10 years, you've seen a decrease in the amount of ownership that they've had. So I think that's going to pick up again. And people right now just don't want to pay, commit to 5-6% interest rates when they were at 2% or 2.5% 4 to 5 years ago when people were buying.
Do you think that we will see the same sort of price gains as we have in years past, because there's a possibility we could end up with rates at a higher level than they were before? We've heard that a lot, as well as the expectation that there's going to be more supply coming to market. There's such a big push, at least efforts towards making that happen. So if you've got more supply and potentially rates end up at a higher level, could we see price gains moderate compared to what we've seen. And I mean, not even talking about the pandemic, surge in prices, but we were seeing big gains in the years leading up to that too.
Well, when you see where the market, how it's performed in the last 3 to 4 years, and we've never had a loss in the market per year, year over year, I actually think that over the next 3 to 4 years, I mean, don't shoot me, but I think we're going to be 25 to 30% higher than where we are now 3 years from now.
Well, I love when people put numbers out there because we
Well,
can
I've been
check
doing
back
it for
on it.
I've been doing it for many years, and I don't think I've ever been wrong, except for the fact that it's been higher than I projected.
Oh, well, there